we have a forecast for tomorrow for the market to go up and reach basically the numbers that they've reached today, except they went a little bit higher than what we were looking for. They did it one day early, and the market is selling off. So we're still not in a great position on the S&P yet to be able to say that a genuine low is in, although I'm leaning towards that. But I want to see how they close today. And we do have some, if you're in our room, you know that we have some longer term forecasts that are kind of shocking for where the market is going to be under certain conditions in the third quarter of this year. And as early as the second quarter, because when, big things are happening, when volatility picks up, it also speeds up the amount or lessens the amount of time it would normally take for the market to reach a particular level. So volatility is not, volatility really means price movement through time or price movement over time, right? And the more price movement in the same period of time, the more volatility there is. So when volatility picks up, timing for future price levels and so on can be adjusted or changed to actually show up early. And that happens more in high volatile markets than it does in normal volatility markets. So it is definitely something connected to volatility. So yeah, the markets have been a lot. Let's take a look at the whole bloody thing. Let's just, you and I, take a look at everything. Here is the annual chart of the S&P. So this kind of clarifies the picture a lot, doesn't it? You could say a lot. Knowing this information, you could really get an idea of where we've been going all the way back to 1997, when we were all younger and more beautiful. And then in 02, and then in 09, and this is, 9 was when the big crash, the housing market and so on crashed, and then the S&P and stock indices took off. Each one of these is a year. So if we don't include the low, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we had a 13-year advance, and that would get the Fibonacci people excited, because that's, I think, a fib number, right, of some kind. Maybe I'm incorrect, but either way, we made a slight new high in this year, the year of 2022, before coming down. And then we go to the 6-month chart. And you know that we had forecast for about a year that this, or some period, it was last year, that we were forecasting in the first 6 months that the last 6 months of last year would mark a top in the market, and that if the market exceeded that high just by any amount, that it wouldn't be sustainable. So even if I draw my line across here, you can't even see, but it really is about 8 points that this year got above last year's high. But we were forecasting this would be the top, and that is our forecast, that is the top, and the market's not going to be making new highs for years. So it's a 6-month top, meaning that this price bar is constructed with 6 months worth of data to make this price bar. And so we've had a pretty good sell-off, but under certain conditions in the third quarter of this year, plus or minus a quarter, and probably it's more likely to think of it as the on-time quarter or 1 quarter early, which would be the second quarter. Under certain conditions, the market's going to be in a somewhat shocking position. And I don't think I have to tell you that the shock wouldn't be necessarily to the upside, right? But I laid out some conditions that it would be to the upside if certain things were to come into play. So we're waiting for conditions to, dictate what the market's going to do. So we've put the 6-month top in, and now we've had, really 2 months down, and we're in the third month down right now, if you include the absolute high that was made $8 higher at 48.08, and the market has started to move down. So we've really just had this decline plus this, and now we're in the third month. a lot of times I won't count the first bar that makes the high. I'll count one. We've made 1 month lower, but you can see here that we did go quite low in the month that started to collapse. And then let's take a look at the weekly. And there you are. And let's also take a look at the daily. So when you see the weekly chart acting like this, chip chopping back and forth, maybe acting a little bit more like it's a smaller time frame rather than a weekly chart, that tells you that a much larger time frame is in control of the market. Here's the daily chart from the highs. Sorry, I had that line up there, but this is the actual high right here, and all of these movements that the market has made. Pretty impressive movement. I will tell you that as long as the market is below $4,269, it's in a dangerous position.